Good morning, everyone. I'd like to welcome you to the 2024 Aldebaran Resources Investor Day. We'd like to thank everyone who's joined us in person, as well as all of those joining us via the live stream through our partners at SIX. We'll begin today with some introductions and then go through the agenda for the event. With us today from management, we have John Black, our CEO, Dr. Kevin B. Heather, our Chief Geological Officer, myself, Adam Greening, Senior Vice President of Corporate Development, and Javier Robeto, our Vice President and Country Manager for Argentina. The topics we'll be covering today will be why copper. I'll walk you through that. We'll then have John come up and talk about our corporate structure and a little bit about our corporate strategy. Kevin will then come up and present on the project itself. He'll walk you through the project using VRIFY. We'll then have Javier present on Argentina and how things have changed so drastically there in the past 12 to 24 months. He'll also talk a little bit about our efforts with the communities. We'll then have some summary statements by John, and then we'll move on to questions and answers. If you are joining via the live stream, you should be able to submit questions via SIX, so please send those through and we'll do our absolute best to get to all of them. As well, if you are attending in person, we will be serving some lunch and refreshments after the session today, so please stick around, take the opportunity to grab some lunch and meet with management. We are a company that is listed both on the TSX Venture as well as the OTC, and we will be making forward-looking statements today. Okay, so why copper? Why do we think copper is the right commodity to be investing in not only today, but for tomorrow and into the future? Well, copper is the third largest metal market on the planet. And the reason it's such a sought after commodity is because it has a number of attractive attributes. It's malleable and non-corrosive, which is why you commonly see it used in pipes in homes and buildings. It's antimicrobial, which is why you see it used more and more commonly now in hospitals, as well as in food preparation. But the number one attribute that makes copper more attractive than any other is its ability to conduct both heat and electricity. Currently, about 3/4 of all produced copper goes either to electrical wires, telecommunication cables, and electronics. And because there is really no substitute for copper and its ability to conduct electricity, anytime you think about electricity, think about copper. So why do we think the demand for copper is going to substantially increase in the not too distant future? Well, first and foremost, it starts with people. Currently on this planet, we have just over 8 billion people. However, depending on which projection you use, as you can see in this graphic, by 2050, the global population is expected to be anywhere between 9.2 and just under 10 billion people. At the same time, the portion of the global population that is considered middle class is increasing and rapidly. In 2020, approximately 45% of the global population was considered middle class, whereas by 2030, it's projected that approximately 57% of the global population will be considered middle class. So why is that important for copper? Well, a growing population with a growing portion of that population with more disposable income means more housing, more infrastructure, expansions of electrical grids, expansions of telecommunication networks, more consumer goods, and more electronics. Just to fuel the growth in the human race, we're going to need to produce a lot more copper in the future. At the same time, we are going through an energy transition. As the globe continues its effort to reduce our reliance on fossil fuels, investment in clean energy is at all-time highs. This is a graphic that shows you global clean energy investment going back to 2015. And what we have here is we've broken it out into buckets, whether it be renewable power, electric vehicles, or battery storage, amongst several others. What I want you to take away from this, though, is the growth rate and the scale of investment we're talking about here. This sector since 2015 has grown at approximately a 6% rate year over year. In 2023 alone, approximately $1.7 trillion was spent on clean energy investments. To give you a sense of the scale we're talking about here, what we've plotted on this graphic is in the black line, the gross domestic product of Mexico. And what you can see here is that since 2020, clean energy investment is outpacing the 12th largest economy on the planet. So this sector is huge already and growing very quickly. So why is this important for copper? Well, clean energy investment tends to use more copper, clean energy tends to use more copper than traditional sources. For example, the electric vehicle can use up to 4 times as much copper as the internal combustion engine. Renewable power can use up to 12 times as much copper as traditional sources. So as this sector continues to grow, the amount of copper required to fuel that growth is going to be immense. So it's obvious that we're going to need more supply of copper in the future, which means we're going to need to build new mines. So where are we on that front? Well, that's where things get a bit concerning. This is a graphic I'm sure many of you have seen before, and what it shows is in the blue and orange bars are major copper discoveries, and the black line represents exploration dollars searching for copper. And the takeaway here is quite clear. Since the mid-2000s, exploration budgets have been quite healthy in this sector. However, we frankly have very little to show for it. The reality is it's becoming harder and harder to find high-quality, large-scale copper deposits. The days of a prospector walking around and tripping over a deposit, those are behind us. The easy projects are found. Frankly, almost all of them are already mines. It's becoming harder and harder, and frankly, as an industry, we're struggling to find new sources of ore. But even when we do make a discovery, it's taking us a very long time to bring it into production. This graphic shows the timeline from discovery to production over a number of periods going back to the mid-2000s. And what you can see is that as of today, it takes us almost 18 years to bring a project from discovery to production. Compare that to the late 2000s, when it only took us just under 13 years. So it's becoming harder and harder to make new discoveries. And when we do make a discovery, it's taking longer and longer to bring them through the production pipeline. So how do we piece this all together? Well, the graphic on the left-hand side shows you the global refined copper consumption going back to the year 1900. As well, it has a projection out to 2050 provided by S&P. What I want you to take away from this graphic, though, is that copper consumption has effectively doubled every 25 years over the last century. And if we assume that projection continues moving forward, or that trend continues moving forward, I should say, by 2050, that means we're going to need twice as much copper as we are producing today. To give you a sense of the quantum of metal we're talking about here, that would mean that over the next 25 years, we will consume more copper that has been produced over the last 120 years. There was a recent study that came out from the University of Michigan and Cornell that indicates 6 large-scale new copper mines need to be built every year for the foreseeable future to meet the coming demands. The reality is we're not building 6 mines every year. Frankly, there's not enough projects to build 6 mines every year. And that's where the problem lies. There's a lack of quality projects that could be brought forward to production at some point in, say, the next 5 to 15 years. But that's where I see our setup at Aldebaran as being advantageous. Because as you're going to see today, we will be delivering a large-scale, high-quality copper asset into the market at a point in time when I feel there will be absolute desperation to secure future copper supply. And ultimately, that can only mean good things for Aldebaran Resources and ultimately our shareholders. So with that, that probably feels like a good segue for me to pass things over to John now, who's going to come up and talk about our corporate structure and a little bit of our strategy. John?
Great, thanks Adam, and thanks everyone for making time to be here today or to catch us on the replays as we move forward. I'd like to also give a shout out to the TMX for providing this forum for us and for our partners at VRIFY and SIX for providing a way for us to transmit. This is, I think, a very new idea for us to be able to reach out to analysts and those that need to know more about the project we have, as well as to investors in general. So we hope this goes well, and we appreciate any feedback people can provide us on that. I'll keep my comments quite brief today so we can get on to the meat of the presentation, which is really what Kevin and Javier will be presenting with much more detail than we typically do in a standard 30-minute corporate overview on project. But just as the high-level view on what we have in the project, Aldebaran has an option to earn 80% into the Altar project, which is already a very large porphyry copper deposit. And even though it's quite large already, I think you'll see today that it's about to get significantly larger with the drilling that we've completed recently. It's also very important to note that we're located in one of the most favorable areas for copper exploration on the planet right now. San Juan, Argentina is a real hotbed for exploration and very much encouraging the exploration for and the development of copper projects moving forward. And also a very key point to realize with a group like ourselves is that we have a team that has executed our strategy before, and we have very good strategic partners to allow us to move the project forward. So just a little bit about our strategy. What we are is we're a group that specializes in identifying projects that can be very large copper or copper gold deposits. We acquire those once we've identified a project that fits our criteria. We acquire those at a low point in the market, and then we drill those out to show the full potential of the deposit, the full size of the deposit, and we de-risk the project through approximately a pre-feasibility stage. And then ideally at that point in time, we monetize the project by selling it to a major miner, the likely candidate to develop the project. Why do we stay in this short period of time? It's to minimize risk for ourselves, and it's to add value most quickly for our shareholders. We try to keep our strategy into a space that fits the time frame for shareholders moving forward. Another way to take a look at our strategy is this is the infamous Lassonde curve, or curve that shows the exploration history of a mining project. And what we're focusing on is that first steep upward leg of value addition into the project between the time of discovery and the time of pre-feasibility. We're trying to compress our work into that space as we move forward on the project. To illustrate this, I thought that I'd point out what happened with our first company. Aldebaran's actually the third company we've had with our same management team, all three companies with the same strategy. And we've successfully executed our strategy with our first company, Antares Minerals. With Antares Minerals, we had the good fortune to identify the Hikira project in southern Peru as fitting our criteria. We acquired the project for $15 million from Phelps Dodge. We drilled that project out, put out a PEA, and sold the project for $650 million to First Quantum. So very nice turn for our shareholders. And we think about that as being on that first steep leg of the Lassonde curve. In detail, it's not always straight up. This is a bit of an adventure when you get on a project like this. We can see on this diagram, we acquired the project, the market didn't pay too much attention to us. It took off as we began to drill. Then we encountered the global financial crisis, which put a little bit of a brakes on everything. But what I'd really like you to focus on this diagram is the far right-hand side of the diagram, where we note a couple key points of time where we put out very significant information on the project. An updated resource estimate as we're coming out of the global financial crisis, followed by a PEA. And both of those attracted a lot of attention into a rising copper market. And what you'll hear from us today is we're well positioned to put out an updated resource later this year and the first PEA on this project next year. So I think we're set up in a position not only just with where our project is, but also with where the market is right now. Adam just laid out the case why copper projects are going to be highly sought after, and we've seen copper already begin to take off just in the last few months. Just a few words about the history of this project so people can understand how we identify a project like this and how this particular one came to our attention. The project was initially drilled by CRA, which became part of Rio Tinto, in the late 1990s. They drilled the first holes into it. They were looking for an Escondida-sized target, so very large, very high-grade secondary enrichment. Their initial 7 or 8 drill holes did not give them the positive indications they want to keep in mind. This was very early days in Argentina. They optioned the project to Peregrine Metals, a junior company working under very much a similar strategy to ourselves. They did the initial over 50,000 meters of drilling on the project. That resulted in the project being sold to Stillwater Mining for $487 million US. So the project at one point was sold for that amount to Stillwater. Stillwater continued to advance the project with an additional 50,000 plus meters of drilling, but it never really fit within Stillwater. And when Sibanye purchased Stillwater in 2017, it opened up an opportunity for ourselves as we were monitoring the project to see if we could acquire the project. So we made a proposal to Sibanye Stillwater to acquire up to an 80% interest in the project. Keep in mind, this is a project that Stillwater had purchased for $487 million. They put nearly $50 million more work into drilling the project out. It was a project that had over 100,000 meters of drilling in it. We can acquire an 80% interest in this project for an initial cash payment of $15 million. awarding an initial equity interest to Sibanye-Stillwater of 19.9%. And to earn a 60% interest, we were required to spend $30 million in the ground in exploration that needed to be done on the project. We have completed that. We now own 60% of the project. An additional $25 million of exploration expenditures will take us to the full 80% interest in the joint venture on the project. And we project we'll be there by the end of this calendar year. So we're well on our pathway to owning 80% interest in the project you'll hear about today. I mentioned that it's important for us to have strategic partners, and I'd like to highlight our strategic partners on this project. Route 1 Investment Company is a large fund out of San Francisco. They've followed our exploration efforts throughout all of our companies and have done well and backed us well going forward. They helped us by putting up the initial capital to allow us to acquire this project and are very good partners for us moving forward. As I noted, we're earning into the project from Sibanye-Stillwater, and they will become an active 20% participant in the joint venture towards the end of this year. And they maintain an equity interest in the company as well. And then more recently, over the last 2 years, when funding has been difficult for companies like ourselves, South 32 has come in on 2 very key strategic placements for us, which have both endorsed the project and also provided us with a partner that provides good technical ideas and observations for us to move the project forward. And then finally, earlier this year, we announced an agreement with Rio Tinto Newton, a division of Newton that allows us to explore their very interesting primary sulfide leach technology. We'll touch more on that in the presentation later. So the resulting share structure for the company is quite tightly held. We can see on the left-hand side of the diagram that Route 1 has just over 44% interest in the company by virtue of the funds that they put up to initially start the company going forward. Sibanye-Stillwater's initial 19.9% position is diluted slightly to a little less than 15%. That happened when South 32 came in 2 tranches over the last 2 years at over market prices, establishing nearly a 15% interest for South 32. So our resulting public float is less than 25%, fairly tightly held, which has its pluses and its minuses for a company like ourselves. Our current share count is a little over 170 million. We've been trading just over $1 recently, which puts us just short of a 200 million market cap. Good valuation, but quite low for the asset that we already have, and particularly for what we'll project we'll be announcing later this year. Analyst coverage right now from Paradigm and Desjardins. This is our share price chart over the last 4 years. This is from the COVID low in 2020. Actually, quite a good chart for our sector. We can see a good progression of share price during that period of time, and approximately annual financings to feed our programs as we advance this project that have progressively moved from 30 cents to 45 cents to 78 cents to 93 cents, and now we're trading a little over $1. So quite a nice share price chart, particularly for our sector and particularly over this last period of time when flat has really been the standard for most of us. And then just finally, what I'd like to do is mention a little bit about where the stages of the project. As I mentioned, our strategy is to identify a project like this, show the full size of it, and then begin to de-risk it by moving it through PEA and pre-feasibility studies. In this particular case, we're nearly done with our initial stage of showing the full size. We have a large resource that Kevin will mention shortly that's put out in 2021 based on the initial drilling on the project. But since that time, we've done 50,000 meters more. By late this year, we'll put out a new resource estimate that'll show the full size of the main altar. We're by no means done drilling. The project will continue to grow, but we're at a good point to cut off the resource expansion now. And that'll put us in a good position to move to a PEA quite soon, early next year. We hope to have that out. And one of the points we like to point out on a diagram like this is not all stages of the project advance at the same manner in the stage points. So a good example is for metallurgy and environmental baseline monitoring. For metallurgy, for primary sulfide traditional concentration, we're practically at the pre-feasibility stage level. There are other aspects that we need to catch up. We need to get the test work done for Newton. We'd very much like to have that done before the PEA to show what that is. And we've got work to do on particularly water for moving the project forward. So you'll stay tuned. We'll be announcing shortly the lead group that will provide the PEA studies and eventual pre-feasibility studies for us sometime in the next few weeks. So with that, I think it's a great point in time to turn it over to the real meat of the presentation, which will be Kevin, followed up by Javier, helping us understand the changes that are happening in Argentina. So thank you.
Thanks, John. Welcome, everybody. I'm going to give you a project overview. This is the first time we've utilized VRIFY, so if anybody starts to feel seasick, let me know. So this is my first time doing this publicly with VRIFY, so we'll see how it goes. Just an upfront statement. I will be showing copper equivalencies. These are the parameters that we use for our copper equivalency. You can find this at the bottom of any of our press releases. So I just put it up here so that our friends here at the TSX won't get mad at me. So we're here in Toronto, and we're going to take a trip down to Argentina, and specifically to San Juan province, which borders Chile. And this is a map, and what I really wanted to point out here is that San Juan province hosts a lot of very large world-class copper and copper gold assets. We've got several clusters. We've got the cluster up at the north here, which is the cluster with Filo, also with Lunahuasi from NGX, and the Jose Maria from the Lundin Mining Group. We also have two producing gold mines, the Veladero mine of Barrick and also Guacamayo, located over here. And then really what I really want to focus on is this area down in here, which is the southwestern portion of San Juan province. And you can see where it's located relative to the capital city, San Juan here. And I've shown our low elevation road that goes into our project. But basically there's a cluster of world-class size copper porphyry systems. And I'll go into a little bit more detail on ours in a minute. If we zoom in on here, what we can see is we've got the Las Palambres mine of Antofagasta Minerals, producing copper deposit just across the border in Chile, 25 kilometers south of where we're located. And right next door to them is Glencore's also equally very large copper porphyry system, El Pachon, that's currently in feasibility studies. And then about 50 kilometers to the north here, you can see about 50 kilometers straight line up to McEwen Copper's Los Azules deposit. So just zooming in a little bit closer, we have a very large land package outlined in yellow. And what I've put on here, and you'll see this as a recurring reference throughout the presentation, is I've highlighted our two 2021 conceptual resource pits. You can see them, they're outlined there in red. And that'll be a reference point for you so that you don't get lost when we start spinning things around. So this is just a view so that you get an idea of what the topography actually looks like. And this is probably where, if you get seasick, let me know. So we have a series of porphyry intrusions, and I'll go through these in a little bit more detail, but this is just to give you an idea. This is the QDM radio area. And then as we pan around, you can see, we can see the Altar North, and we can see the main Altar Central and Altar East system. And then way down here in the bottom of the valley is our exploration camp. And then if we keep even panning around a little bit further, we can see the QDM South target area and also a new target area that we've identified. And I think what the common theme you can see in all of this is the rocks are very, very strongly colored. They're altered. And that's a really good clue. As you can see, there's zero vegetation here in this part of the Andes. We're at very high altitude here. The tops of some of the peaks where the project are just over 4,000 meters. So by Andean standards, that's pretty typical and is actually probably a little bit on the low side. A lot of projects are above 4,000 meters. Filo, for example, is at over 5,000 meters. So, the altitude here is very, very typical of this part of the world. So what I'm going to show you now is a short video. It's like 40 seconds. And this is my cue to, this was an analyst tour we did earlier in 2023. And I think this will give you an idea of the scale and scope. This is also my time I know there's some of you that in the room that were actually on this trip, and we're going to be gauging interest and potentially running another analyst tour either towards the end of this year or early next year. But I think this gives you a scale and size of what we're talking about here. This thing is enormous, okay? And all of those roads and drill pads this is the Altar, the main Altar Central, Altar United in the bottom of the valley, and then Altar East on the far hillside. And I think if you look really closely, and I can't use my pointer and verify, but I think if you look, you can actually see the drill rigs. They're like little specks. This deposit is huge. It's roughly 3 kilometers long by 2.5 kilometers wide by almost 1.5 kilometers deep. Okay, so this is a very, very large system. So going back to our map, we'll just zoom in a little bit closer. And I really want to focus first on where our Altar camp. So we've come from San Juan City. We've got a low elevation road that comes in. The highest point between San Juan and our camp is the camp. Why is that important? It's important because historically, the old road that used to come in when we first took over this project used to have to come over 2 very high passes that would be very susceptible to being snowed in and cut off. And so the field season was relatively short, almost like 4 months. With this low altitude road coming into our camp location now, we've expanded the field season to 8 months. Okay, so we've more than doubled the field season, and that's quite significant. Again, this is a 360 drone view of our camp, and the reason why I want to show you this is that you can see that we're in a very large flat valley. It's probably a very good location to put infrastructure. Okay, so although we're in the high Andes and there's steep topography, there are places to put infrastructure, and you can see as I pan around here, you can see our helicopter pad. Even though we don't use a helicopter, it's for emergency purposes. And you can see the project up in the background there, and I'll just zoom in on that. So again, this is just another view up at the project. You can see, again, this is what we saw in the drone view. You can see the drill roads, and there you can see the road going down. And then in the distance here, you can see again back down to where our exploration camp is. If I pan around the other way, you can see some of the other targets. Altar North is a porphyry, another porphyry target. And then just over this ridge, you can see the QDM radio porphyry system. Okay, so Altar is not a single deposit. It's a cluster of deposits. So we showed that there's a larger cluster of porphyries, El Pichon, Palambres, Los Azules, Altar, but then within the Altar project, there's a subcluster of individual deposits, okay? And so what I want to take you a look at is to go through those deposits, and you can see that those deposits occupy roughly about a 7-kilometer strike length. To put that in perspective, what I've done is I've overlaid our porphyry systems onto the map of downtown Toronto. And what you can see is where we're located, roughly where that little red blob is. The deposits would span from roughly the Don Valley Parkway all the way out to just past the exhibition place, to give you an idea of the size that we're talking about here, okay? And just the Altar Central, United, and East would cover more than downtown Toronto, okay? So if we go back to our 3D model, I just want to walk you through the drill hole history that John mentioned. The initial drilling on the project was done in 2004 by CRA, which was an exploration arm of Rio Tinto. They drilled 7 holes. Again, I've put the pit in red for your reference. You can see the holes that they drilled. They then optioned the project off to Peregrine Metals, who did an additional close to 59,000 meters of drilling, focused almost extensively on Altar Central, a few holes over in the QDM area, and then limited drilling where we will eventually make our Altar United drilling, discovery, but the holes were all very, very short. And then Altar East at this stage really hadn't been discovered. Then Sibanye Stillwater came in and they drilled an additional close to a little over 47,000 meters. And you can see that they focused on delineating the radio porphyry system and then also the Altar East porphyry system. And then Aldebaran took the project over and we've drilled actually a little over 63,000 meters of drilling. And you can see how, I'll just flip back and forth so you get an idea. We did more infill drilling over at radio, and we've obviously done a lot of drilling in the new Altar United discovery area here, and you'll see why that's significant in a few minutes. Okay, so let's continue our voyage to understand the deposit. Again, for reference, the conceptual 2021 pits overlaid so that we can see where we are geographically. The geology, I'm going to go through this pretty quickly, but in simplistic terms, the host rocks to some of the mineralization are andesitic volcanic rocks, rhyolitic volcanic rocks that overlie those andesitic volcanic rocks, and then some dacitic volcanic rocks that everything's dipping off towards the east. So those are the wall rocks to the porphyry style mineralization, but a lot of the mineralization actually occurs within porphyries. And here we can see the QDM system, the radio porphyry system. These are obviously highly cartoonified. The Altar North porphyry system, the Altar Central porphyry system, and then the Altar United and Altar East. And those look like they're merging together. But at this stage, we're still determining whether they're actually separate centers or whether they're part of one large center. And again, you can see those stretch over a 7-kilometer strike length. So to put this into more perspective, this is focusing in now on the main Altar portion of the ore body. We've got leach cap. So for those that are not technical people, that's the part of the rocks that are leached out. So the copper that was there has now been leached out because of groundwaters that have been percolating down through the rock over millions and millions of years. And so that's the area that's stripped of copper. There's still some gold remaining in those rocks, but the copper has been stripped out. And that copper gets stripped out and deposited in what we call the supergene enrichment blanket. And you can see that outlined here in blue, and I'll just spin that around a little bit so you get an idea. And so that's typically mineralization that is amenable to heap leach technology, okay? Now, one of the problems that the previous operators had on this project is that there's chalcocite, which is a secondary copper mineral that's amenable to heap leach technology. But it's also associated with energite, which is an arsenic-bearing mineral and is not leachable by traditional techniques. And that's where Newton comes into the game. Is the Newton sulfide technology has the ability to not only obviously leach the chalcocite in the enrichment blanket, but also to leach energite and also chalcopyrite if there's any chalcopyrite there, okay? And so it has the ability then to potentially take what historically was a supergene enrichment blanket that was marginal because of recoveries to now potentially being something that's very much more economically attractive. And that's the reason why we're proceeding with the Newton studies that we're undertaking right now. And then underneath all of it, and I haven't colored it, but all the drill holes that you can see underneath that blue, that's all the primary sulfide, okay? That could be amenable to either traditional concentrator or also to the Newton heap leach technology, okay? As John and Adam already mentioned, we already have a very sizable resource based on our 2021 resource. We've got close to a little over 11 billion pounds of copper in the measured and indicated categories. We've got an additional 2 billion pounds in the inferred, and we've got 3.4 million ounces of gold, and then some silver as well. And you can see this is a three-dimensional rendering of that resource. And what I'm showing here are all the measured, indicated, and inferred blocks. And you can see those all fall within that resource pit. We also have a small gold resource sitting over here. It's roughly about 600,000 ounces at about a rough grade of, I think it's around 0.7 or 0.5, 0.6, somewhere in there. But it's in sulfide. So we're still looking at ways to metallurgically make that more attractive target. Well, as I mentioned, one of the things that's going to allow us to move from the PEA to a PFS relatively quickly will be, we can use for a PEA inferred resources. But when we move to a PFS, we need measured and indicated. And you can see we already have a very sizable percentage of our mineralization in the measured and indicated categories, which will allow us to move to PFS relatively quickly with not a lot we anticipate of additional infill drilling to raise category of that resource. Okay, so now what I want to show you is that we actually have what we call stranded blocks, okay? And this is still based on the 2021 resource model. And I'm going to spin this around so you can see. You can see that there's resource blocks that are stranded below the pit. Therefore, they're not reported in the resource. So the idea is, how is there a way that we can capture those into a resource? There's two ways. We can either potentially infill this area in the middle and help to draw a much bigger pit, or we potentially look at the potential to have underground mining on these, okay? And so if I put the inferred resources on there, you can see, again, there's a fair bit of blocks that fall outside the known resource, and the radio target over here is not in resource at this moment, okay? Okay, so let's keep moving on. So we'll zoom in again to focus more on the Altar area. And there's our drilling that was done prior to Aldebaran taking control of the project. And that's what that resource is based on, okay, is pre-Aldebaran drilling. And this is a section that, for those of you who follow us, we use quite often to show the perspective view. And what you can see here, and I'll just, again, annotate here for a second. This is the main Altar Central area, and this is the Altar East area. And then you can see this gap in the middle, okay? When we were doing our due diligence, we recognized in some of these drill holes that there were indications that there was maybe a missing part of the ore body that hadn't been recognized by the previous operators. And so in 2022, I believe it was, we drilled a wildcat hole, hole 221, right in the middle of that gap area. And that hole was very encouraging. It hit 1,250 meters of 0.35 copper equivalent. Now, the grade doesn't sound high, but the important factor is that it's all in wall rock, okay? And we know that a big significant portion of that intercept was in wall rocks, i.e. the rhyolite wall rocks, that are not very good host rocks typically. The fact that we're seeing these kinds of grades in that kind of host rock is very encouraging, okay? So we were very excited. At the same time, we were doing three-dimensional geophysical work, and the results of that three-dimensional geophysical work identified this very, very large conductivity feature in both magnetotellurics and in the IP data. And again, I know many of you maybe aren't technical people, but really what that blob is telling us is that there's a mass in the rock there that's very conductive. And that's typically indicating that there's a lot of sulfide, okay? So Fast forward to the drilling that we've done over the last 2 years, and we've now infilled that on 200-meter centers, and every single hole that we've drilled into that anomaly has hit long runs of mineralization. And I think you can see just from this diagram that this is the new Altar United discovery, and we're actually seeing better grade material down there, okay? So that's the same diagram, and what I've just done is to show you that the radioporphyry also shows an association with this conductivity feature in the geophysics. And quite frankly, one of the target areas we also see out here is what we call the gap zone that has not been drilled. There's an historical drill hole that was drilled here. It was obviously drilled way too short. So that's a target potentially for the future. So I just want to show you this, to show you that that geophysical anomaly actually has 3 dimensions. And you can see that it's as long as it is almost wide. This is a very large feature, okay? And like I mentioned, every time we've drilled into it, we've hit mineralization. It's not an indicator of grade, okay, but indicator of mineralization. Okay, and just again, this is a similar diagram, but really what I wanted to point out is on the bottom here, just a few of the more significant intercepts that we've hit during the last 2 years into the new Altar United discovery area, which is in here. Here you can see hole 225B, which was 950 meters of 0.6 copper equivalent. You can see hole 228 here was 565 of 0.6. And then just recently, a couple of weeks ago, we released hole 241, which was, again, 650 meters of 0.8 copper equivalent. So very nice grades, okay, over very long intervals. Okay. So what I want to walk you through really quickly here is just give you an idea of the distribution of copper. So we're focused mostly here on Altar, the main Altar ore body, but you'll see the radio ore body off to the west there. This is the copper grade shells for everything greater than 0.1. So you can see that really mimics very nicely that geophysical anomaly. They're very, very similar in scale and size. If we go down to a greater than 0.3 copper cutoff, you can see there's a lot of it that falls within the resource pit. But I think the thing that you can really see is how there's a lot that's down below that pit that's currently not in resource. And again, you can see over here as well, radio is also not in resource. Okay. And then if I even make it a higher cutoff to greater than 0.5, I think you can see that really what's happening here is those porphyry centers are really where the higher grades are. They're focusing around the intrusions. And then you can see how down deeper in the Altar United area, it's really going to help us because it's going to start to, you can almost imagine that we might see something like that. Okay, so you can see the way the existing pit has this funny bottom to it. And that's just because there was never enough deep drilling in the middle between the 2 known centers. And now we've infilled that, and it's actually better mineralization that's in the 2 centers that were previously known. We can look at gold. Gold's interesting because although the gold grades are not high, it's very unusual for this part of the Andes for the porphyries to have gold in them. And you can see that we're talking here about low grade amounts, but when we're talking about a large scale deposit like this, these kinds of byproduct credits could be very important. And if you look, again, I apologize for the color. So I think I put a slide in here that I took the pit out so you could see these. This is showing the greater than 0.1 gold. And what you can see is that in Altar Central, which is this area right here, we've got gold, but it's gold that's associated very high up in the system. Whereas if we go over to Altar East, we can see it's penetrating down much deeper because it's a different style of gold that's occurring with the copper mineralization deeper in the porphyry system. And then if we jumped across and we looked at, if we jump across and we looked at the radio system, you can see radio is a bit unique in that it's almost a 1-to-1 copper to gold porphyry system. Okay, and so you can see there, it's got some character. Sorry, there's the seasickness part there. You can see it's got some characteristics that look, in terms of geometry, these two guys here look somewhat similar. Okay, in terms of, we're clearly seeing similar type geometry. What I'm showing you here now is molybdenum, and the reason why I want to show you molybdenum is that there's molybdenum down deeper in the deposit, and why this is important is that in the future, this could be probably not in the early stages of a potential mine life here, but certainly towards the end of the, as we get deeper, moly could be an important byproduct. But more, I think from an exploration point, the reason why this is interesting is that typically in porphyry systems, we have molybdenite forms a halo around the outside. And so what this is very suggestive of, and I'm just going to rotate it here to a position where we can see it a little bit better, is what this is very suggestive of is that this might be a halo on another porphyry sitting down here. Now, whether that porphyry is too deep for us to go after or whether it isn't, it still could be bringing in mineralization that's then being superimposed on this earlier mineralization related to earlier porphyry systems. So this is a classic setup that we'd like to see in really big systems, is we get multiple pulses of mineralization stacking, or what we call nesting, one on top of the other. So we'll just look at copper equivalent really quickly. It shows the same thing. But I thought just for completeness, I would run you through just to show you that it shows the same thing. Now let's jump and talk about arsenic. This is still a work in progress, but I thought I would share this with you today. We're still in the process of modeling some of the arsenic distribution in the hypogene. But what I'm trying to show you here is that you can see there's this large orange mass sitting up in the top here. And that's arsenic that's hosted only within those leach cap rocks, so the rocks that have been leached out of copper, and those are rocks that will probably go to a waste dump somewhere, and also arsenic in the supergene. And again, that material potentially is going to go to a heap leach pad, and that arsenic will be then converted to scorodite, which is an arsenic oxide that's inert and becomes stable. And so the point of showing you this is that although there's always been a knock about arsenic at Altar, a lot of that arsenic occurs up in rocks that are either going to the waste dump or they're going to a heap leach pad, and they're not going to a potential copper concentrate. The levels of arsenic down here in the hypogene, there is arsenic locally, but it's much, much lower than this stuff up in the upper part of the deposit. And I just thought I'd throw a couple of photographs in because I am known as the rock doctor. So if I don't put a few rock photos in, I wouldn't be living up to my name. But what I wanted to point out to you here is if you really look at this, you can see the arsenic's actually controlled by these little tiny narrow veinlets, okay? And because a lot of the historic drilling is subvertical, sometimes, and these veinlet zones are vertical, sometimes the old holes drill right down the same veinlet for several tens of meters. So it accentuates the amount of arsenic that's there. And so what we've recognized is that these little veinlet zones actually occur as discrete structural zones, and they're not everywhere. And so that's what we're in the process of modeling, is those discrete structural zones, in order to constrain that we're not blowing arsenic out where it doesn't belong. Okay, just a quick note. This is a fairly busy slide, but I just wanted to update people where we are with the current drill program. We've officially stopped drilling. We've shut our camp down now for the winter. We've got probably about a meter of snow up at the project. So it was time to leave. And pending right now. We've publicly reported all the holes in green, and you can see there's 13 of those. Like I mentioned, 4 of those we just released 2 weeks ago. And then we still have 7 holes that we're waiting on final assays. The turnaround times are somewhere now. They were a couple of weeks ago between 40 and 50 days. They're down now to closer to maybe 35 to 45 days. So I'm hoping that in the next couple of weeks, we'll have the next batch of holes ready to put out to the market. We accomplished our goal of 20,000 meters. You can see we just got a little bit over 20,000 meters. And that's really an accomplishment because the last 2 years before it, we were always quite a bit short because we had a lot of issues with our drill contractor. But we worked really hard with them this year, and we were able to achieve our goal. So what I want to just take you through really quickly here is just to quickly show you again the porphyry centers, and that there's a clear association within those porphyry centers of very strong quartz stockwork veining. You can see the quartz stockwork veining here. This comes from a hole from Altar East. You can see this was a hole that hit 900 meters of 0.5 copper and just about 0.3 gold. For a copper equivalency of 0.63. But this interval that we're seeing right on the screen here, that actually ran 16 meters of almost 0.94% copper equivalent, of which 0.81 of it is copper. So the reason for showing you this is that Altar has always had the knock that it's low grade. But in fact, it's because it's so large that there are high grade cores in each of the porphyry centers, and they get diluted out a bit because we're encompassing so much mineralization that obviously the further we get away from the source of the mineralizing fluids, the lower the grade gets, okay? But there are some very, very sweet high-grade portions of the deposit. And this is just a 3D representation to show you the very clear association. This is showing you the copper grade shells, and with the density of quartz veining, you can see there's a very, very good correlation. And you can also see that our new drilling into the Altar United area here continues that trend where we can see with the red colors there, very high quartz vein density and veining density in general. Just a few quick shots, and before anybody calls me out on it, most of these samples are higher grade samples. And the reason why I'm showing you these higher grade samples is by design for 2 purposes. One, they're really nice examples of the style of mineralization, so you get an idea of what they look like, that the metallurgy here is very simple and the recoveries are very good, but also to show you that there are these high grade cores to each of these individual porphyry centers. So these are from the radio porphyry. And again, what you can see here is that it's very almost a 1-to-1 relationship between the copper and the gold. If we jump over to Altar Central, here we can see it's dominantly all copper. And we see mineralization associated with potassic alteration. But we also see, in these 2 examples, but we also see that there's a vent coming in and overprinting that's bringing in also very high grade copper, and in this case, a bit of gold as well, associated with green sericite. And we suspect that that's the outward manifestation of that hypothetical porphyry that I mentioned that's down deeper related to that moly shell. Okay, so we've really got 2 superimposed styles of mineralization here, right? Which again is the kind of setup you want to see in big systems. You want to see things that are complicated because that tells you there's been a lot going on. Similar story at Altar East, where we can see mineralization associated with potassic alteration here. But the other thing that's very interesting, and again, I know that you aren't geologists, but it's the kind of things we as exploration geologists really look for, is if you look at these 2 slides right here, you can see they're very chaotic. And what's happening here is you can actually see quartz veins that are coming along and they're being truncated off, okay? And that's because we've actually got the younger intrusions coming in and they're starting to assimilate the early intrusions. And both of those intrusions are mineralized. Okay, so you have an early porphyry that's veined and mineralized, another porphyry that's coming in, assimilating those mineralized fragments, but also is mineralized itself. And again, that's the kind of thing you want to see. And this is some pictures from our new Altar United discovery. Again, we see mineralization associated with biotite, secondary K feldspar type alteration, but we also see this green sericite overprint. So there's a real pattern, and you can see that that green sericite really brings in very spectacular chalcopyrite. And as we move down deeper, as I've already shown you, significant amounts of molybdenite. Okay, so we're getting close here to the end. So I just wanted again to reiterate this association of the grade with the porphyry centers, but also that the mineralization does extend out into those wall rocks as well. So now if we go back to our resource model, as I mentioned earlier, we have a very sizable resource in hand. That resource is only those blocks that are falling within inside that pit. So all of these other areas here, here, here are currently not in resource, okay? And you can see where our new drilling is. You can clearly see now that that's probably all gonna meld into one large mass of mineralization sitting immediately underneath that pit. So put it into perspective, there you can see the same thing in the hillside. So I think that we're setting ourselves up for a very, very significant uptick in our resource. To put this into a little bit of topographic perspective, we obviously during the PEA and then to PFS, we'll be evaluating how much of this can fall into a large super pit and then how much might be more amenable to underground block caving. But with that in mind, we haven't made any decisions. We still need to do those trade-offs. But the part that's important to recognize is that we've got topography working for us. So we come back to the camp location, which, sorry, this is a... So we come back to the camp location sitting down in here, and that's at roughly 3,100 meter elevation. You can see that the bottom of the current known copper mineralization is sitting here at about 2238. So it wouldn't take much to put a decline in to come in underneath all of that and commence an undercut to do underground block caving. So this is not a case where we're putting in a shaft, or we do have topography working in our favor if we decide to go to an underground situation for some of that deeper mineralization. And again, just to again reiterate, this is just a more the same kind of view to show again we've got this large flat area where potential infrastructure and things could be built. So we got a few more slides and then we're done. But what I'd like to leave you with is that we also have other exploration targets that need to be tested. We've got the southeast gold trend here, which looks like it could be epithermal gold type style mineralization. We've also got geochemical indications. There might be another porphyry center down to the south here. We've got obviously the Altar North porphyry, which does require more follow-up drilling. I mentioned before this gap zone. And then we've got this QDM South zone that I showed you on one of the earlier slides. And then this newly identified Cenicero center here as well, which we just completed a road in there at the end of this year. And so hopefully next year we'll be able to get in there and drill a couple holes and see what we have there. And just to conclude a little bit, we also, apart from Altar, which has been clearly the focus of today's presentation, we do have a number of other very interesting projects in the company's portfolio. You can see them located up in northern Argentina in favorable mining provinces of Jujuy, Salta, and Cajamarca. And I think the two real projects that are the ones that I particularly am pretty keen on are Rio Grande, which is another potentially large copper gold porphyry system, and the Aguas Calientes epithermal gold silver project. We're evaluating, we've had a number of companies under CA looking at these projects. We're evaluating the strategy that makes most sense to us and to our shareholders of how to advance these, even including potentially spinning those out into another company if that looks like it might be the preferred route. So we are, although we're not actively doing work on the ground there, they are projects that we are evaluating and seeing what the best way forward, especially coming into this, what looks like a very, very bull market for metals. So I just want to conclude with a final video. It's kind of a bit of a scenic tour of the project, and then after that, I'll pass it off to Javier. So there's the camp. We can host roughly a little over 100 people in our camp. That's the road heading up to the project. That's our core logging facility at the project. All of the people that make it work. I'd like to have a shout out to all our workers in Argentina. Again, you can see a drill rig there, a couple of drill rigs. Very spectacular landscape. It almost looks like an open pit mine now just from the drill roads and the drill pads. We have big rigs. We're drilling holes that are going down to close to 2,000 meters depth, so we need big rigs to do that. Don't worry, they don't listen to me anyway, so. Very few junior companies work on projects of this scale. So I think that's one of the things that sets us apart from a lot of juniors out there in the copper space. And with that, I'll end my portion and I'll pass this off to our Vice President of Argentina, Javier Robeto.
Okay, thank you, Kevin. Hi, everybody. So today I'm going to present some brief considerations on Argentina in the region, and then we are going to talk a little bit more about San Juan. As John mentioned, has become a really hotbed worldwide for mining. So first of all, the one thing to consider about Argentina is it's a federal country, so we are a federation of provinces. And the very important thing about this is that each province is the owner of its own natural resources. So that is why it's really, really important where are you located in the country. So there on the left, you can see Argentina, and this is a map that has been around for several years that actually shows in different colors which are the most mining-friendly jurisdictions in green, and then moving to the less mining-friendly jurisdictions in red. You can see there San Juan, which is kind of like in the central west part of Argentina, and also the other very mining-friendly area is in the northwestern Argentina, where most of the activity with the lithium is located. So location is really important. The one thing to mention here is that changes are coming in this country. So the province of Mendoza, which is in central west of Argentina, immediately south of San Juan, has been the most anti-mining jurisdiction in the country, actually put the first anti-mining law in place. And now you can see that that has been changed to yellow. It's no longer red, and that it's more like a bet that the industry is having in the current administration. They just started in December last year, and they have already made some changes into the mining code, provincial mining code, to actually allow mining investment and exploration to start in the southern part. in the Malargüe municipality that actually has a social license in place to move forward. So we will see how that goes. The anti-mining law is still in place, but it's a bet in a long time to see how that changes. And the other important thing here is that San Juan is viewed as the model in the country. We have several of the other governors in the country actually visiting San Juan, its mines, and its authorities, and actually learning how to export that model into the other provinces in the country. This is just to see Argentina in the region. This is South America in the map, but we have highlighted two countries there, which are our neighboring countries, but also direct competitors for mining investment, which are Chile, immediately adjacent to Argentina to the west, and then Peru to the northwest. So those two countries are also represented in the chart to the right. So first column, you can see Chile. In the middle column, there's Peru and Argentina on the right. So there are three parameters that we have put regarding mining, so you can put a perspective of what is the potential and the growth potential of Argentina. So first, you can see those parameters are from last year, from 2023. So mining exports, you can see that Argentina, it's very, very low. It's only like $4 billion, while Chile and Peru are much bigger than that, in the 40 and 50 billion ranges. And the percentage of those mining exports into the GDP, you can see that it's 15 and 9 for Chile and Peru, respectively, while in Argentina, it doesn't get to even like 1%. And what is even more important to see is the copper production in millions of tons. You can see the ranges there, and Argentina stands at 0. Argentina did have a copper mine, a big copper mine, but that was the Bajo la Lumbrera mine, but that was closed in 2018. And since that year, Argentina hadn't had any copper production, and so that's why current authorities actually want to take part of the global revolution with copper and actually insert Argentina into that scenario. One important thing to consider regarding changes is our current president. So who is Javier Milei? I'm sure that most of you have heard about him because he's kind of like shocking the scenario worldwide. So he was recently elected. We had a presidential election year in 2023. And after a ballotage or second round, he actually won in November 2023 and went into power in December. So he won that election with more than 55% of the voters. He, by background, he's an economist. He actually taught in several universities, and also for the last 15 or 17 years, he was in the private sector working as a head economist for Corporation America. That is a big corporation of companies that is not only present in Argentina, but also other countries in the region, and it's all over the place with airports, technology, real estate, and so that is why he's a true outsider into the political scene. So he actually formed his own party. He ran for the member of the lower house. He won him, and also with Victoria Villarreal, who is currently the vice president of Argentina. So he was for 2 years a representative in the lower house, what we call diputados in Argentina, and then he decided to actually run for presidency. It was really, really rapid, the growth of his whole platform. He used a lot on social media, but the one thing here is that you have to remember that Argentina has been immersed into populism and socialism for the last 20 years, with only that little hiatus or gap in the middle of Macri's administration. But people were absolutely fed up in the country with that model. It was extinct. So he actually made a promise. You can even tell by the name of his own political party, La Libertad Avanza, or Freedom Advances. So he got elected on a promise to actually end socialism, and he planted the seed into people that the Argentinians have been held hostages of socialism for 2 decades. and it's time to actually take control of their own lives and be free. So what is Milei's plan or the first actions that he's taking? So the one thing to consider here, he started and all the main efforts are doing an abrupt decrease in inflation. So the bar chart that you can see there in the upper right is actually the evolution of the inflation in the country during Milei's administration. Remember that he has been in power only for 6 months. So each bar is actually monthly inflation. So started in December 2023, he inherited the country with 26% inflation, and he has been dropping that dramatically and steadily over the months. So the last official number that we have is for last month, for April, which stands at 8.8%, or we rounded to 9%. But the polls at the moment for this month, for May, says that it's going to be in the order of 6%. So Argentina was in the verge of going to hyperinflation. Probably those numbers are hyperinflation for Canada already, but for us, it's high inflation, but we were in the verge of going to be much worse. So he is in the process of correcting that. So he's doing a really strong adjustment in the country, but that has causing a major recession and a lot of undertaking and suffering from the population. So every single Argentinian is doing a big effort at the moment and is supporting the president because it is appreciated that this is needed after 2 decades of populism. So that's why I put his approval rate, which is the images there. Even with all the suffering that we are undergoing in the country in this moment and the adjustment and the job losses and everything, his approval rate stands at 55% in average. Depending on which poll you take, it can go up to 60%. So it's actually the first time in Argentina that we see this kind of support when we have adjustment going on. So he's also doing a big control of the central bank. So before, with previous administration, we were printing pesos like crazy and just giving out to everybody. And now the bank is no longer printing any pesos. He's doing also a big reduce of the size of the state. And he's not renewing contracts. He's proposing a voluntary retirement to different divisions. And also, he's in the process of making the necessary changes to go into privatization mode for the state-owned companies. And also part of those structural changes also is a big reduction of ministries and also the discretionary funds that are given from the federal government to the provinces have been reduced in 95%. So that's a lot of adjustment there. And then the other very important thing is Milei and Milei's team is actually working hard on what is hopefully going to be his first law bill approved. We call informally that bill the Omnibus Bill, but the actual proper name is the basis for the reconstruction of Argentina. So that bill actually encompasses several topics. So it goes into like privatization, changes in the labor, but there is a specific chapter there, that the one that we are interested at miners. It's one that is called the VRIFY, and that stands for an incentive regime for big investments. That is actually, when you actually see the law proposal, the law bill, it is thought to be for 7 different industries, not only mining. It's mostly thought to be for mining and oil and gas, which are the big things in Argentina, but it's also for technology, artificial intelligence, forestry, etc. So the one thing is that it considers benefits not only on the fiscal side of things, but also customs and exchange, and it brings stability agreements for 30 years. The threshold that you have to surpass there in order to be eligible with your project, it has to be new investments for over $200 million. It has several benefits points, but I just put kind of like the main ones here. So the corporate tax is going to be reduced from 35 to 25%. There is a mechanism for accelerated value-added tax recovery, which is really important, especially with these big mines being built. Also, regarding the customs part, that there is with importation, that with everything that is necessary for construction and operation of the mines, there is an exemption from importation taxes. And also you have mechanisms that you can do a carry forward of your tax losses for several fiscal years. So this law proposal was already treated at the lower house, at the Casa de Diputados, and it has already been approved. After that first approval, it has moved over to the Senator's House, and it's in this moment being treated at the Senator's House. So it hasn't been approved yet. There has been some delays because there are negotiations with the opposition. So it is likely that some changes are going to be introduced to the overall bill, not only this incentive regime chapter. So if some changes actually get introduced, then it has to go back to the lower house and get final approval over there. And then some other things to consider is an accelerated amortization scheme, and that has huge implications because that actually means that you pay less taxes at the beginning of your project or your mine, which of course it gives a more healthier cash flow and quick returns on investment. Then this is very important to consider. Yes.
Did it address repatriation? Oh, that's always been an
Yes, it actually does. And it also goes into the export taxes. So there's actually like it's staged. And after the third year, you can freely move that, the money, and also you don't pay importation taxes. It actually, first year is 20%, second year is up to 40% of free disposal. And after the third year, it's no restrictions. And this is really important because, as you know, Argentina is immersed in a big crisis, is bankrupt, Argentina. So current administration has openly said that is relying on these 4 pillars to actually bring Argentina out of the big crisis. The one that is more known for Argentina is actually the 4th one, which is the agriculture. And Argentina has been historically an agricultural country, and 40% of the exports actually come from there. The one thing very important is that Milei is saying this out loud, but also last year in the presidential election, all the candidates, even the left-wing candidates, were all saying that they will support this in order to get out of the crisis. So first one is copper mining. Remember that in Argentina, we have 7 big copper projects that are in different stages, but most of them into pre-feasibility, feasibility, or even pre-construction stage, like Jose Maria. So they are ready to go and waiting for the necessary structural changes to be due to move forward. Then we have the lithium mining, that it's really big in northwestern Argentina, in that little triangle that we share with Bolivia and Chile, and that is already a reality in Argentina. We have more than 50 projects in different stages in the country, but we do have operating mines that are already producing and exporting. And then the big bet is also on oil and gas, that we have the big fields in southern Argentina, in the Patagonia region, especially with the Vaca Muerta shale oil and gas, which is a tremendous source there. And then moving to San Juan. So why San Juan is emerging, or has already emerged, as a big mining district worldwide? So first of all, mining is a state policy in the country, and it has remained like that for several administrations, even during the deep, hard socialist part of the previous administrations in the country. And so there is a very, very strong government support. We do have an exceptional setting. We are sitting right in the Andes, and we share the border with Chile. So we have the same geology, and as Kevin mentioned, we are in the right neighborhood with other sizable copper and gold projects and mines. The government of San Juan is also very interested that we as an industry move forward with our project, and that also has to do that, as Kevin mentioned, we have 2 operating mines, Veladero and Gualcamayo gold mines, but those are in their mature days and reaching their life of mine. So the province is really interested that those mines are replaced, especially for tax payments and job positions and everything. So we have a quick permit process that is a big plus. So every time that we actually file our environmental or water permits to do our job, it only takes us between 3, 4, or 5 months to actually get those permits in place. In other jurisdictions, like in the north, we have projects that can take up to 12, 14, 16 months. So that it's really, really positive on San Juan. It's all clear processes, very transparent. And also San Juan has a very strong social license in place, not only because it has been historically a mining district in Argentina since the 1800s, but also because people have seen all the benefits from modern mining in the last 25 years. And then also some changes are happening in San Juan. So the graphic in the left actually comes from the Fraser Institute. I'm sure that you are mostly familiar with this, but that shows which is the investment attractiveness of different jurisdictions, especially this one in LATAM. So you can see there, this is very recent, this is from this month, that San Juan sits in the second place in Latin America for investment attractiveness. And that's even more top ranked than typical mining jurisdictions like Chile and Peru that you can see a little bit lower there in that chart. And the other important thing to mention is that if you actually do pay attention to the top 3 ranked positions, that's Salta, San Juan, and Jujuy, those 3 jurisdictions are all in Argentina. So the changes that did happen in San Juan are, we also had elections of governor last year. So Marcelo Orrego got elected, and that's a big change because San Juan had the Peronist party for more of the last 20 years. So there was a change in the political color there, and it's the first right-wing party that won. And we are working very, very close with Governor Orrego, who is very, very pro-investment and pro-mining. And he's even pushing harder to actually put these minings in place. So we do see true actions happening, like we have the biggest mining show that goes in the country that is called the San Juan Mining Expo that happened this month, and there were more than 15,000 people registered. And it was also a good place that the government launched the copper roundtables. We as an industry have a private, like an industry copper roundtable that has been around for the last 2 years. And with that roundtable, we actually do a lot of actions with the industry and communicate with the federal government in order to have the necessary changes done. And what do we need in terms of infrastructure, bring to our sites, tax benefits that we need to get. Part of this incentive regime was actually built on what the industry fed the government on the needs. And also the other good thing about San Juan is that you can see there that there are already major players of our industry already in place in San Juan. And some of those are actually a strategic partner of us, like already mentioned, South 32 and Rio. And then finally, I just want to take the opportunity to show you and stress to you that our commitment with our presence, not only in San Juan, but also with our communities that are closer to the project. So over there, we have the community, the biggest one is called Calingasta and Barrial. Those are the 2 main ones that we work with. And so on the social side, our social efforts and investments from all the different areas that we can actually tackle, we focus in these 4 main ones. So first of all, we do a lot of education, and we actually have agreements in place with the local universities, and we actually brought some careers up to the Andes hills, to the foothills of the Andes, where our communities are, and they can actually study like tourism or mining or nursery and stuff that never existed before. Then we do a lot on health with infrastructure and some programs with the local hospitals, and also sports and environment. We have a recycling program, and for plastic and other stuff that then we convert into for plastic things for kids' playground in kindergarten. And so the other important thing to mention here, and this is the end, is that it's a pleasure for us to actually be in this southwestern portion of San Juan in Calingasta, because we see a lot of joint effort with the other companies and our neighboring projects. So some of these programs are actually done by Aldebaran itself, but we do a lot also in conjunction with Glencore or Fortescue or McEwen. So that speaks highly of our industry and the involvement with the communities. So that is what I wanted to show you. Then afterwards, I'm sure that you might have some other questions on Argentina, because there are a lot of things happening, but we can tackle that. Now it's time for John to come back. Thank you.
Okay, great. Well, thanks, Kevin and Javier. This portion of the presentation is where we've gone much deeper into the projects than we typically do in the time we have allowed. So get your questions ready. I'll just wrap up with a few short words here on this, and then we'll open it up for question and answers. I thought it might be good just to go a little bit deeper into the Rio Tinto Newton agreement that we have right now. This is an agreement that was announced earlier this year. It's a simple agreement. There's no equity position by Rio Tinto or no investment into us from it. We simply provide samples from the project to Rio Tinto, and they conduct test work at their cost to identify whether their new primary sulfide leach technology will work on our project moving forward. The reason we have such an easy agreement with them is because we have a strong relation already established with our sister company Regulus on a project in Peru. We're working very closely with them. This technology, for those of you that are not familiar with it, basically is investigating whether heap leach technology, which we can apply to the upper weathered portions of porphyry copper systems, might be modified and made applicable to the lower unweathered primary sulfide portions of deposits. So it has tremendous potential to unlock projects. But some of the benefits that this was originally investigated for were to reduce your capital costs to build a mine, to be able to process lower grade material moving forward and more economically. But it also has some very notable potential ESG benefits to the project. If we can demonstrate this is applicable to this project, it would utilize significantly less water. It would also utilize significantly less power per unit of copper produced. It's great that copper is now identified as a green metal, essential metal for use in anything that involves electricity right now. But mining of copper still can be carbon intensive. So if we can demonstrate that this type of technology will reduce the carbon footprint of a mine, that has tremendous benefits. And then finally, it also produces copper in country, which adds additional value within the country. So it's very socially and politically expedient as we propose moving a mine going forward. This is the project timeline, and one of the things I'd like you to come away with from this presentation is that we've been very active on this project. We've been producing a lot of drill results over the last 2 or 3 field seasons, but this coming 12 months will be a very critical point in time for the company. As Kevin pointed out, we still have 7 drill holes from this season's campaign. That'll probably be 2 more batches of drill results coming out in the next few weeks to 2 months on those. That'll take us to mid-year. But most importantly, highlighted on this diagram are 2 key studies that we anticipate will be coming out in the very near future. We will do a mineral resource estimate update in Q4 of this year. As Kevin has indicated, that clearly is anticipated to be a very significant addition to the overall size of the resource. And that, even more importantly, will set us up for the first PEA on the project. And we are currently forecasting that to be within the first half of next year. We're giving fairly broad guidance on that. That's partly because we want to make sure we get those results from the Rio Tinto Newton test work to determine if we can evaluate that as a potential pathway to go forward with the project. So within the next 12 months, continuous flow of typical drill data from the project and those two major milestone projects. If we reach all the way back to that history in Antares, when we saw that very rapid increase in valuation of the company, it was because of delivery of these type of significant reports moving forward. As Kevin's already outlined, the Altar project is currently very large. This is some work that was put forward by Desjardins, indicating the size of undeveloped copper projects held by junior companies. You can see Altar is already positioned very well within this chart and is poised to significantly increase and move to the left and increase size on this moving forward. And then just finally to wrap up, a little bit of words on M&A in the copper cycle. We believe that we're already strongly into what I consider an M&A cycle associated with the shortage of copper that has come up, as Adam has indicated on this. But to date, it's really been major companies buying producing assets. So it's companies that are buying smaller projects from other groups already in productions or buying other companies that are in production. Very important stage of this. They're doing this because they felt that the companies have been undervalued. It's a way for the larger companies to grow in their percentage of the copper market. But it's very important to point out this does not result in new copper production. This is simply changing ownership of already producing assets. It's safe M&A because there's production already in hand. It's easy to evaluate. As those assets get either the available ones for acquisition get taken up, or as the price of those assets increases to the point where they're no longer attractive to acquire, we anticipate in the very near future, we'll see major companies move towards acquiring pre-production stage assets, the type of asset that we're delivering with Altar. So this is very well positioned. As just a little bit of a kicker, I think in the last stages of this M&A, we're seeing major companies attempt to acquire other major companies. And we're seeing those acquisition attempts become increasingly difficult as the valuation of a group like Anglo starts to run. At some point, it will no longer be attractive to acquire at the price that's necessary. And then companies will have to seek other avenues to grow as they move forward. Very obvious opportunity is to put new projects into production. But many of the major companies don't have those projects on their current books, and that's the groups that we're catering to by producing and delivering a project like Altar at the right time for them to go forward. So just to wrap up, I think we've demonstrated we already have a large deposit in hand. It's about to become very significantly larger. Javier's provided a more in-depth look at why we view San Juan in Argentina as a very attractive site to do this. And with the partnerships we have in hand, we're in a strong position to continue to fund our projects moving forward and advance them technically to be de-risked to the point where they become an attractive opportunity to move forward. So I think with that, we can move into question and answers. So Adam, do you want to take over and guide with that?
Okay, great. 6 is still populating the questions coming in from the live stream. But for those in the room, if there's any questions, Ben Charrington, our manager for investor relations, can bring around a microphone and ask away. So if you do have a question, just pop your hand up and we'll get to it.
Hi, sorry, Bob Quarter. The 20,000 meters that were drilled in 2024, can you talk about the cost of that?
John, do you want to answer that?
Yeah, we typically budget approximately $400 per meter, and that would include direct drilling cost, assay cost, and supplies directly related to drilling like core boxes and material like that. Doesn't include labor. So despite the hyperinflation that Argentina's been experiencing, it's actually not that expensive to explore in Argentina. It's very easy to move money into Argentina and spend it in Argentina. The challenge has been getting money out, which is what we're excited about, the changes that are coming up to make that possible.
So with trailing inflation of 289% in the last 12 months, I assume your workaround is to pay everybody in US bucks to provide some stability. How do you deal with that kind of inflation rate with your supplies and your workers? Is it all US dollar source so you could care less, or what impact does it have?
It's a wonderfully complex situation in Argentina, how we do this, but typically our our major costs are priced in US dollars, but paid in local currency. And we've benefited from their two principal exchange rates, the official rate and what's called the blue rate in Argentina. That blue rate has allowed us to import dollars at a more favorable exchange rate and pay it that way. So overall, our cost in US dollar terms, both for labor and general cost, have actually trended down over the 5 years we've been working on the project in sort of a seesaw fashion. We adjust salaries, for example, locally on once every 2 months to keep up with inflation. Hopefully that will start to decrease now as we get more stability. But our costs haven't been bad on the project at all to move forward. That hasn't been an issue for us.
Wet finger guess as far as the little Fisher Price drawings that you had of, okay, let's get seasick and rotate these things around. It appears that the guess is you had one deposit is now deeper, second deposit is deeper, and now there's a blob in the middle, as well as a piece over here, which was not part of the original description. So wet finger guess says looks like a crude 3x increase in your 11 billion pounds. Is that within the ballpark as what you guys figure when all your to the 10th decimal place stuff gets done?
Kevin, do you want to tackle that one?
Well, because I'm sitting here inside the TSX building, I got to be really careful about what I say. I don't know what the number's going to be, but I think visually just looking at it, a double is possible. I don't know if I'd go as far as saying a triple, but let's see what it comes out to be. But any way you slice it, it's a significant increase to an already very large project. So, I mean, quite frankly, we've already got the threshold where major companies are looking and interested, right? And that's usually about 10 billion pounds of copper in the ground. And we're past that. And I think you can see from what I showed you today that we're going to significantly increase that. What the exact number is, I don't know. And I know that we put a forward-looking clause on our first slide there, but we got to be careful because that's the kind of stuff that can come back and bite us. So it's going to get bigger, a lot bigger.
Okay, just to look at sunk costs, you've said 169,000 meters have been drilled in total, and that may or may not include your 20 this year. So if you value those at $400 US a meter, that means there's sunk costs of $89 million Canadian. So approximately half your market cap, if the moment is value of stuff that's got you to the point where you are now. The 11 billion ounce or pounds that you got, is that pounds equivalent, including the gold, or is that plus gold on top?
No, that 11 billion pounds is just copper.
And if you were to throw the gold on equivalent on top, would it push it up by 20%?
I don't know. We have the copper equivalent number on that slide.
We don't do copper equivalent on.
Yeah, because you get into trouble with the exchange. Like, I mean, you guys may not see it, but we got our wrist slapped a couple of years ago about copper equivalency. So we tend to be. That's why I put that statement up front that we will talk about it, and here's the conditions we're using because you guys aren't regulated like we are. So.
Okay, so if I had to look at the gold of 3.4 million ounces from recollection.
Yes, correct. In the measured and indicated categories.
$1,500 ASIC be a reasonable guess as to cost of extraction?
I'm not sure. That might be a question.
I don't think we're really at the stage we can do that. But once we get to the resource estimate, particularly the PEA, we'll be able to address that more directly.
Okay.
And we would view it very much with a copper lens. 90% of the project value is in copper. And maybe 10% in byproducts, most notably gold and in the latter years of the project, some molybdenum.
So we've got the numbers right. If I take 11 billion pounds of copper divided by 170 million shares outstanding, I get 65 pounds of copper per share. If I hopefully will 2x that, going back to the Desjardins chart, how does effectively either the 65 pounds rank you or a 2x rank you versus the other guys?
We'll move considerably to the left. Some of those projects that were to the left of us on that diagram are already fully drilled out, so we don't anticipate they'll grow in size. One or two of them, just like ourselves, are continuing to expand, so we're all trying to move up. But Kevin made an important point that we're already through the threshold to be of interest to major companies. We're now moving into territory where we become an extraordinary deposit. What we want to do is stand out in the top 5 or 6 on that list.
Okay, one last one. Access to water, you suggested that Newton might give you 30% reduction. Setting all that aside, what's the availability of water in the local neighborhood?
Javier, you might be better to answer that.
So in this part of the Andes, you actually do have, especially in the southern part of San Juan, there is access to water. So we have streams over there and also underground water. The actual process in actually to get your water permits, you have to actually go to the authorities with a more advanced project in feasibility stage and actually demonstrate what is going to be the magnitude, the parameters and the magnitude, and you actually get your quote of water. So we have several projects in the area, so it's a sensitive issue, the water, and so we need to better understand not only us but also our neighboring projects. So far, the only project in the area that has a secure water right, it's Pachon from Glencore. And then the rest, we need to better evaluate which are the sources and then ask for the authorities. But there is in the area.
So there's no like pipeline, desal plant type things that you see in Chile. You're expecting to have the water from local source, natural sources.
I can jump in on that. Yeah, that would be our preference by far. Desal technically could be considered. It's only a short distance to the coast. There is currently desalinated water provided to Palambres, 25 kilometers to the south of us. So it would be the same distance for us to bring desalinated water to our project, but it would involve taking water across an international border, which becomes a more challenging situation. It's certainly possible. It adds cost to a project. We obviously prefer to design a mine that uses less water and use locally sourced water would be our first preference, but that is something we could consider.
With your drilling that was done the past year, I know most of it, or a lot of it anyways, was at depth, kind of looking at increasing the overall size and extent of the deposit. But was any of that directed towards the peripheries, the edges of the deposit, maybe reducing some of the strip, filling in some of the stuff that's classified as waste currently in the past resource that could maybe help the economics of a PEA?
Yeah, that's actually, I'll take that one. That's actually, I was taking it whether you guys wanted me to or not. That's actually a great question. And I've gone through this a fair bit in some of our webinars, but yes, some of our drilling was designed to kill 2 birds with 1 stone. One, to look at trying to expand the deposit at depth, but by virtue of doing that, we had to drill obviously through the upper part of the rock. And those were in areas where in the block model from 2021, there was no drilling. And so in our model, we have 2 kinds of waste material. We have defined waste. That means that there was a drill hole or a series of drill holes that defined that there was no mineralization there. So that's defined waste. And then we have a thing that we call undefined waste, and it's because there's no drilling. And so we focused on doing a program specifically to the south of the deposit, where we drilled 4 holes with big step outs, 200-meter step outs, both from the deposit and then a long strike. And every one of those holes found below or above break-even cutoff mineralization in the areas of the pit. So what that means is that those would probably go to some kind of a processing and not go to a waste dump. So yes, that will help. The other thing that helped the strip ratio. The other thing that I think is really going to be helping us, at least at the resource stage, is that we put a lot of time and effort this field season in doing geomechanical studies. And part of that was to look at what were the optimum, what pit slopes could we get away with using for a resource shell. And the historic resource here that I've been showing, 2021, the pit slopes were 40 degrees. okay? Because there was not sufficient geotechnical information to warrant a steeper pit slope. We've done that preliminary PEA level geotechnical work now, and the numbers that we're getting back from the geotechnical firm are somewhere between 45 and 49 degree pit slopes. That doesn't sound like a big difference, but it's huge. And that's because the rock competency here at Altar is incredibly good. And so that's what's giving them the confidence to allow us to use steeper pit slopes, at least for the resource. So that will also have a huge impact on strip ratio.
Kevin, while we wait for the next question, maybe you can just talk a little bit about the average depths of pits now in Latin America.
Yeah, one of the questions that we get quite often is that, a lot of people still live, I think, in the world where pits are 500 or 700 meters deep. And really a lot of the big copper mines in South America now, those pits, there's quite a few of them that are down below, getting to close to 1,000 meters deep, and some have gone beyond 1,000. And many are projected to go to at least 1,200. And I can tell you that our rock competency is much better than those mines. And so I suspect that us being able to float a resource pit to 1,200 meters here is pretty standard practice now in South America, like I said. And a lot of those mines these are big scale features, right? I mean, like I showed you there, the mineralization's 3 kilometers long by 2.5 kilometers wide by, quite frankly, probably close to 2 kilometers deep. So it's a huge volume. And so these are really super pits that we're talking about. Bingham Canyon's below a kilometer depth now. So that's, I think, an important aspect that you see what I was saying today, that we can deepen the pit. That's within the realms of reality, right? So.
Just on the economic numbers, if I caught the kind of quick flash, your numbers were $3 for copper, now $4.50, up 50%. $1,400 for gold, now $2,400, up 71%. So it was a wet finger impact on the kind of economic feasibility or expansion. If you end up saying, geez, we could probably crank our numbers up by 50%, since 90% of the value of the reserve or resources is in copper, what impact might that have on your 11 million pounds?
Huge.
Just, a few thoughts on that. In fairness, despite those metal price increases, other costs increase as well. So we do have to be a little cautious to just assume that full benefit from that percentage increase in metal prices. And as a policy, when we take on a project like this, we interact a lot with the major mining companies, both currently with Altar and Aldebaran in our companies as well. And so we know how they evaluate a project like this. And even if we're allowed to use 450 copper for projection going forward, people that evaluate the projects we have will use more conservative numbers. So you'll find that we tend to use slightly more conservative numbers than that. And that's just to pass the optic test from the major companies that are looking at us. So that's the lens that they'll use to evaluate our project. So we believe it gives us more credibility to not max out the numbers that we could use.
But we would typically, when we put out these kinds of studies, we will put in sensitivity tables that'll show you what could be at different metal prices, right? So.
We have a question here, Javier, this is probably for you. Can you talk about the omnibus bill and how it could affect glaciers? And are there any glaciers on the project?
Yes. So as I mentioned, the omnibus bill has been around and being treated at the lower house and the senator's house for the last 4 months. So the first omnibus bill that was submitted by President Milei actually was over 660 articles. And in that first bill, there was a chapter on the environmental changes that included the glacier law. Now, the one that is being treated at the senator's house is iteration number 3. And with several negotiations with the opposition, actually that whole environmental chapter was taken out from the omnibus bill, together with several other aspects like on labor and many other things. So the strategy now, from what we hear from the government, is actually those that were kind of like more sensitive issues are going to be tackled in separate bills. And right now, the omnibus bill that is one at the Senator's House doesn't include anything on glacier. Then regarding the actual wording and the changes that were proposed in the omnibus bill is very good because it actually sets parameters on what needs to be protected, because the way that it's written, the law that we have, the glacier protection law from 2012, is actually really wide and a big gray area on what should be actually protected. And the changes that are being proposed now by the current administration actually tackles exactly that matter and says, within the periglacial area, which are the features that you have to protect. So specifically to Altar, that was part of the question, there are two levels of glacier consideration here. There is a federal law that has its own federal inventory, and there's also a provincial law that was put by San Juan that has its own inventory. So that was also part of a political strategy by previous administration in San Juan, that when there was noise that it was going to be treated at a federal level, San Juan and also with the other mining provinces actually moved really fast and put together their own provincial glacier protection laws that are less restrictive, and actually they say specifically what has to be protected. Because the spirit of the law, both laws, national and provincial, the actual spirit is to protect the source of water and not a glacial feature by itself. And that's a really key part to consider, because it's part of the strategy that companies and provincial governments are using. Because, for example, in the case of Altar, and responding to that question, in both inventories, there are some glacial features in the mining concessions, also in other projects, but we do not have white glaciers. So it's not with ice that you can see. It's what we call rock glaciers, that it's just a pile of rocks that actually has some ice caught in the inner part of that rock glacier. In the case of this one, these are really all really mature, and actually you can see that they are kind of like deflating. They are losing, they are dying because they've already lost most of the ice. And that's become really important because the strategy behind this, and that has been already applied by a neighboring project that's Pachón, owned by Glencore, is that if you can scientifically demonstrate that some geological feature that is in the inventory, it's not contributing a lot to the overall water balance in the basin, then that specific feature shouldn't be protected. So that is part of the strategy that we are following. And this law has been around for 12 years. Aldebaran and previous operators have been continuously taking a lot of scientific information year after year. And it's actually mandatory by law that every session we have to take information and then submit that to the government and to the Glacier Council. And so we have tons of information on which is the water quality. We have done isotopic studies to see if the water is actually like juvenile water from the past snow last winter, or if it is ancient water kept from the glacier. And then you can submit that to the authorities, actually at the provincial level first. And at the end, if you can scientifically demonstrate that any specific feature is not contributing water to the overall balance, then it can be declassified from the inventory, and it doesn't have to be protected. And then each province actually submit that to the federal level for consideration to be actually declassified from the federal inventory.
And a working example of that is our neighbors at Pachón, Glencore, actually went through this exact process. They have very similar features to what we have, and they were successful with this strategy in having their glacial features declassified. So that's the same route that we're currently in process. And like Javier mentioned, we've done a lot of monitoring. It's part of our obligation on the project. And so I think we've got a good chance that we'll be able to do what Pachon, our neighbors to the south, were able to do.
Okay, I think we have time for one more question because we're standing between people on lunch here. Oh, we have one here in the front.
Just setting expectations on the budget. You spent roughly, my guess, $10.6 million on drilling the 20,000 meters in 2024. You got 10.3 million cash on the shelf. Most of these are reported. What's the guess as to the kind of cash burn that's required to basically get the pre-feasibility study finished so that we can end up saying, yeah, you're probably going to have to do a raise. Once you end up saying, yippee, our resources have doubled and we're all happy and the stock's gone up and we're going to raise another $3 million. Anyway, so what's the guess as to the cost of the pre-fees?
To feed a project like this at the scale we work at, we typically spend around 15 to 20 million Canadian per year. That includes all costs associated with the project. And you'll note that on the diagram when I showed our share price, we've done approximately annual financings in that range. And the last one we did was last year in 2023. The cash position we showed was in March, so we've drilled with 4 rigs since that period in time. So we're pretty well utilized the funds that we have to complete this year's program. We can complete the resource estimate with that. We can even complete the PEA with that, but we won't have the funds that we need to do an aggressive drill program next year. The next year's drill program will continue to test additional areas, but we'll also see a lot more focus on geotechnical type test drilling to get samples to further evaluate Newton technology and begin to move into more pre-feas type activities on the project. So we will want to be well funded to move into that. So I think it's fair to assume that we'd be looking for additional funding between now and say October.
Aggressive drilling would be, should we did 20,000 in 2024, you do 30 as a guess in 2025?
We're still formulating the plans on that as we go forward, but for right now, I would say a similar amount to what we did last year, just changing in character some of it from being purely extension drilling and resource definition drilling to incorporating some of the other drilling styles we'll need to move forward.
Including water wells.
Importantly, including water, yes.
So why don't we end it there? John, do you want to make a few closing remarks?
Sure. Well, thanks everybody. This is kind of an inaugural event for us to investigate this type of a forum. Hopefully it's been helpful for those of you who've been in live attendance today, those that are listening on the live stream, and for those of you that pick this up on a feed afterwards. I'd particularly like to thank Adam and Ben from our team who came up with this concept. We're trying to explore ways that we can provide additional information in an effective way. We can't get everybody down to site frequently. We hope to get many of you down to site next year to further investigate, particularly when we have the new resource out with more information. So thanks very much, and we look forward to additional questions. If we haven't been able to answer your questions today, it's very easy to get in contact with us. Ben Charrington manages our IR function. You can contact him, you can contact myself or any of our team members with questions about our project. Also just about the copper industry in general, where we see the state of things going forward, or specific questions about Argentina. Javier is a fantastic source to get deeper into things about Argentina moving forward. So thanks for your time. Look forward to further interaction.